Good afternoon, everybody. This is Jeff Scott. This is March 13th, 2016, and welcome to this week's rendition of my top-down review. I titled it Bear Market Rally Continues. Yes, I'm still thinking this is a bear market rally until proven otherwise, and I'll show you some data in a few minutes to support that. My contact information is hgsidoc@gmail.com, and I just want to point out that next week I will be out of the country, so there's a good chance you will not be getting one of these. But who knows? I did it when I was in Australia. I might as well do it when I'm in India as well. All depends on how I deal with the time change. Disclaimer, as always, is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. Keep in mind, I'm a doctor, not a broker, and most doctors lose their money with their investments. I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading. I have paid for all those tools. Trading involves risks. You and you alone are solely responsible for any investment decisions you make. From time to time, I do talk about options. I refer you to the Options Industry Council handbook that reviews the significant risks associated with options trading. I have married two schools. I married CanSlim on the left, as introduced by William O'Neill, made automated and into software by Woodward and Brown, who improved upon it, and then Morales and Catcher, who took it to another degree. Short-selling book, most recent book by Morales and Catcher, may become more apropos over the next few days or weeks. I also have a strong influence from my buddy George Lee. On the right-hand side is a friend, mentor, teacher, trader, trainer, author, John Person, who I have the luxury of spending once or twice a week in his office trading alongside him. He is just a master of the markets, which is the title of one of his books. He's authored a number of books. He trades equities, options, futures, day trades, swing trades, position trades, great with options, and has a number of innovative tools that I use, such as high close dojis, low close dojis, and his PPS signals. And then I use Van Tharp's rules for money management, position sizing, etc. I have a lot of software. I don't show you them because you don't need to get lost in the wondering how much I've wasted, which has been significant. I use TradeStation or Thinkorswim real-time for trading. I use Genesis. It's my favorite thing for monitoring the markets, the futures, etc. I use HGSI for aftermarket analysis along with EdgeRater. I'm a big fan of seasonality. I don't take sides here. There's pros and cons of each, but the nice thing is because of competition and now Best Choice being sold and to somebody who wants to really improve and continue its fine work, we all win because the more investment that's made in those programs, the better it helps our trading. And then I use a number of websites. I always like to remember that markets go up and markets go down. I don't care if you're looking at an index group, an index, a stock, a future. Everything has this pattern, and this pattern is fractal. I find it every day in almost every trading instrument in some time frame. You must know where your trading instrument is to determine how you're going to manage it. In fact, some of the things that I do depends upon where I think we are in the cycle. I continue to wonder where we are. We've been in an uptrend for 4 weeks, which means I've been very long. But is this a bear market rally, or are we returning to the bull or a new bull? Probably time hasn't told us that answer, but I'll give you some facts about bear market rallies, which this one plays right into. I always like to look at where we came from. Here's my sector review, which I do in TradeStation. I watch this real time in the market, and this told me, at least at end of day Friday, the market was extremely strong. As you notice, gold was the only group that was weak. Staples, and utilities, which have also been leading the market, also had a little bit of weakness. If I look at my major markets in Thinkorswim, you know what? Let's just bring that up in Thinkorswim. That might look easier to see. Here is the daily markets. First thing you notice, in the upper left-hand corner is the E-minis, then the NQs, the YMs, the TFs. The VIX in the dollar in the lower right. So on the 4 equity futures, you notice all the green above this is a bullish sign. But notice that we've run up against that 200-day moving average on the E-minis. We're right below it on the NASDAQ futures. We're at it on the Dow futures, and we got a ways to go on the Russell futures. This really, to me, is a big line in the sand, and whether or not we can breach that line will have a lot to say as to whether we go on to my third scenario, which was to new highs. We are right there, and it wouldn't be surprising to see some back and filling between the 50 in yellow and the 200-day moving average before we break out or break down. If I quickly look at the VIX is traded below its 200-day moving average as it moves back down towards that 15 level of complacency. It starts low, and when it goes high, that's when we get out of equities, and when it's high and it goes low, that's when I want to be loading up. So we are low, but we have no evidence that it's moving up. And the dollar is struggling to get above its and stay above its 200-day moving average. I made a point of emphasizing this at the George Lee Greg Mills meeting this past weekend, was just because I might feel some negativity. I don't change my position until I get signals. And right now, I have pretty much across the board, and it depends on what platform. You notice that in Thinkorswim, I'm in a buy signal, PPS buy on the E-minis, a new one on the NASDAQ, on the YMs. Now, it's interesting, on the Genesis, I actually went into a buy on the Russells, but we're still in a sell on the Russell. So I don't have a lot of big signals to dump my positions. If I quickly look at the weekly, you see the same thing as we're just coming up to that 50 weekly moving average. And really, these are three: E-minis, the NASDAQs, the YMs, that were all sitting right at that 50 weekly moving average. And, the Russell's way below that. All these are in a weekly buy signal. So again, I'm concerned that this thing is run too far, or not too far, it's run far. And I expect at some point us to pause, break above the 200 and retest the 200 would be extremely bullish. Potentially break down below the 200, obviously less bullish, more bearish. And this, by the way, is my Genesis screen. The first line are the E-minis, then the NQs, then the TFs, then the New York NYSE, and then the YMs. The top row is I believe, 5-minute bar, then becomes daily and weekly, and you can notice everything is in a daily buy and a weekly buy. Hard to say the market's going to zero when everything is in a buy. Could change at 9:31 tomorrow, don't know. Now, a couple of things I like to look at the rates. Now, they turned up this past week as the market rose, and I think as long as the rates are below 2%, and we are still below 2% or 2.5%, I think it's some concern about the market and weakness in the economy. So moving above 2%, 2.5% is probably not a bad thing. Overall, rates are still at the bottom part of the cycle, and I saw some strength this weekend in MLPs, REITs, utilities, dividends payers, and even the home builders. What was interesting, there was also a lot of stirring in the regional banks, but that might be because of some of the concerns about oil bankruptcies may have abated with the oil barrels going up. The AD lines, I point this out in that the Russell never really rolled over on the 1,000 much. The big stocks maintained. The little stocks broke down quite a bit, but even the little stocks have turned up in the Russell 2000. On number of stocks trading above their 200-day SMA, still only about 35%, 38% are trading above their 200-day moving average. So on a longer-term basis, we still are probably, I'd say, oversold. But on a short-term basis, now over 85% of the stocks are above their 40-day SMA. So there is some short-term market, I won't say exhaustion, but overbought in the setting of a longer-term oversold. If I look at the number of stocks making 4-week new highs versus 4-week new lows, And there's a big correlation between this and what the market's doing. It hasn't rolled over, but it's kind of at the highest it's been in the last 3 or 4 years. Again, evidence of short-term overbought of this market. The McClellan, I'm not sure I updated this. Looks like last week's slide, so we're going to skip this. Was excessively overbought last week, but this is last week's slide, so ignore that one. The buckets, still 90% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands, which is bullish. With 90-10, it's almost to the point where we're overbought. But you can see we have less stocks trading above their Bollinger Bands this week, as some of those overbought stocks probably came back some. No Hindi in sight. The Hindenburg is sort of the signal mathematical that occurs when the big guys are dumping their stocks to the little guys, and it often signals market tops, and we're nowhere close to a Hindenburg. The reason why I watch this is most, if not all, major market moves over the last 50 years have followed a Hindenburg. Not all Hindenburgs are positive, and perhaps this is still a correction in a bull market because we haven't seen a Hindi. Have you participated in the biggest rally since November? It's been kind of stealthy. I mean, I've made some good money over the last 3 or 4 weeks. The last week was a little bit more challenging because Monday was a pretty good sell-off. But on the Woody indicator, you could see how many days of green we had, and you really have to go back to October, November, since the last time that we had this much of a sustained rally. Now you notice that we've got all this yellow stuff over here in the maroon, and that really is a sign of volatility. And so this has not been a simple move. This has been a move that's had a lot of volatility built in, as you know from watching day to day. I like to watch the canaries in the coal mine as well as my leaders index to see if I can't find evidence of a market that is rolling over or moving back up. The canaries are some of the FANG stocks plus a few more, and you could see they bottomed back in early February. Have had a nice run. Had a doji this week, still in a bongo weekly down. Be nice to see them break above their 200-day moving average. You notice I capitalized EUREKA. This green bar here is a EUREKA sign. And when we see that, it's only measured either on the NASDAQ or in this case the NASDAQ or the NYSE. And that's a sign of a sort of our HGSI family follow-through day. There was also a MOBO breakout on Friday on the Canaries. So I would say the Canaries are holding. It'd be nice to see them go up, but kind of like the market, are they going to go sideways in between the 250 for a while? Here are the FANG stocks. So Google, I think, looks the best. MOBO breakouts, Kahuna broke above the 50, and this was one of the stocks on my buy list this week. Down here is Amazon, sort of looks like the index stuck between the 50 and the 200. Facebook has held up well. It's above its major moving averages here. Everything is green. Did have a MOBO breakout from a squeeze on Friday, and that also looks buyable. And down here is Netflix, which may actually be getting ready to be a good short, and we'll talk about that later. I don't spend much time on this, except it's something I look at every day. Lowry is a service that I buy data from, and you could see I really highlight where my arrow point is, which is the selling index above the buying index, which is not a time to be all in. It is not, they are slow, I believe, and but it does give me a signal that says all is not well in this market. Perhaps supports the hypothesis that this is a bear market rally, not a new bull or return to the old bull. I put together last week a list of leaders, which is listed here. You can always stop it and write it down. And I went through a couple thousand charts to find what I thought were the leaders in the market. I then created a leaders index in HGSI. And the whole point here is if these have been leading this run over the last 4 weeks, and you could see a pretty big move here, 30-40% move, then if these start to roll over, then that doesn't say good things for the market. We did have a red candle high up here. We're at the high jump, so we're extended. Of course we're at extended. These are all the leaders. We'll be interested to watch, and its OBV continues to be above its moving average. Again, I check this every day. When this rolls over, I get more concerned about the market. Know your news and your EPS dates. As I've said many a times, it's a judgment call to hold your stocks over earnings dates. It's bad judgment to not know when your stock earnings date is scheduled. On the left are some of the key news this week. So we had on March 16th at FOMC rate discussion. I think it's all going to be in what they say. I don't think anybody expects the Fed to raise rates. We've got some PPIs, we've got some CPI, we've got a bunch of housing and building retail sales. A lot of news this week. Now, mind you, the 18th is also options expiration. So if you're holding some long options that are in the money, you might want to roll them up and roll them out before the Fed speaks. Take your profits out. If you want to hold on to them, just go to a higher strike price so you can put some money in your account, pay yourself, and if the market sells off hard, you won't lose the profits that you've worked so hard to make. I know I'll be doing that. It's time for me to book some more profits. And then on the earnings calendar, I won't say a light week. There's still plenty of things there, but it certainly looks like this earnings cycle is slowing down. Market thoughts. I'm not sure how stealthy, but we've now been rallying for 4 weeks back into an area of predicted resistance, which is those 200-day moving averages. Short term, we're getting more overbought. Many of the leading stocks have moved up to resistance as well. I started with 3 scenarios. I've now erased the first one. I'm left with 2. Do we move up to the 200 SMA and fail, or do we break through to new highs? That remains the question. We still can't tell you which we are. And then are we in a bear market rally, which could be a bull trap, or are we back to the bull or a new bull? I thought I put a new slide in. Where did I put it? I did it. It's not in this version. Son of a gun. All right, I'm going to put this on pause, and I'm going to go get that. Make sure. All right, sorry about that. I'm back now. I just wanted to share with you this. I've mentioned several times, are we in a new bull? Are we returning to the old bull? Are we just a bear market rally? Went through the last 6 bear markets. I counted up the number of rallies that were greater than 5% and the number of rallies greater than 10%. As you could see in the last 6 bear markets, there's been 9 rallies of 10% or more. So until proven otherwise, and maybe taking out that 200-day moving average is a big story, certainly taking out the new highs, I'm still thinking this is a bear market rally. Our usual agenda, top-down review, little bottoms up, charts of the week, and we'll say goodbye. Last week, I chose BGCP. I chose it for a number of reasons. Not the least was a 6.2% dividend. Squeezing here, breaking above its moving averages, had a kahuna earlier in the week. Coming out of the squeeze, everything was green. When I looked at it in TradeStation, it had a weekly high close doji with rising OBV daily and weekly. So I thought this looked great. I put in my orders, and lo and behold, nothing happened. It traded up and touched the buy stop, so you may have been filled. It pulled back into congestion during the week, and it closed right below the buy stop. If you didn't fill, leave your order in. I think this still looks good, maybe even looks better. It's got a new PPS daily here. It was in the PPS weekly. Still in a squeeze, still looks good. We'll come back to my next chart of the week in a few minutes. So let's go into TradeStation. And let's go to my market view. So just for those that are new, let's only pay attention to a few things. Daily on the left-hand side, then weekly and monthly chart. The color of the bar is something from Elder. It's called the impulse indicator. He uses it as a filter. When it's green, the buying window's open. He could be buying. He could be holding. When it's red, the selling window's open. He could be selling. He could be holding. When it's blue, he can do whatever he feels is appropriate. So I look at the color of the bar. These arrows are person's PPS indicators. They're sell in red, buy in green. The little dots at the bottom are MACD convergence or positive divergence. If they're on the top, then they're bearish convergence. Down here is the high jump bar, but we're not going to spend much time with it. So let's very quickly run through the markets. Let's start with the S&P. It's in a new person buy daily. It's in a person buy weekly with some divergences as well. On a monthly, it's finally turned green on the elder indicator, but I point out that we're still in a monthly downtrend. So are we in a counter trend against that monthly retracement? Perhaps. NASDAQ, similar story. Buy on the daily and weekly, still in a sell on the monthly. The Dow, buy on a daily, weekly, green on the monthly, but in a person buy signal. If I look at the Russell, let's use YM, buy daily, buy weekly, and green on monthly. So what's not to love? And even though I'm concerned that we're getting close to a place where I expect resistance and some increased volatility, still a very strong looking market. The futures aren't open yet, being that it's 3 p.m. in the afternoon. And I guess that's 3 p.m. after the time change. Very quickly, let's take a look at some of the sectors. Materials in a buy signal throughout, even on monthly. Materials are strong. Energy, buy daily, weekly, still in a sell monthly. Notice the divergence persisted a long time before the stock moved. Divergence here, or convergence, bullish convergence on the way down as well. Financials, a new buy came in on Friday. Take a look at Bank of America. A lot of regional banks had a move on Friday as well. Industrials, in a buy on all three time frames. Technology, in a buy in all three time frames. Staples, you notice what's the little dots here on the daily and the weekly. Staples have led this market up, and they're showing evidence of tiredness with these red dots or some bearish MACD convergence. What does that mean? Well, let me just show you. Higher highs, but if I look at the MACD, and I'm no expert at drawing, by the way, you can tell that. But lower highs on the MACD, suggesting that some of the pressure leading to the buying. So staples might be time to lighten up. Utilities, also getting old. So the two things that have been leading are starting to look tired. Healthcare, been lagging, new buy signal, still in a monthly sell. And then discretionary, a new daily, weekly, buy, monthly, still in a sell, but with a green bar. So a lot of strength in the market. Everything looks strong. Just the staples and the utilities that have led us up are starting to look a little bit weaker. All right, let's go into HGSI. Open up my warehouse view. Bring it over here. Let's go down to Woodward and Brown user groups. First group, which is major markets. Let's put on our T view, which is all price and volume heavily weighted towards Friday, and see the strength of the market is in small and mid-cap stocks, kind of where growth stock investors live. Volatility, the dollar, gold and silver near the bottom. Small stocks, interestingly, near the bottom here as well, but they had a pretty good week, up 2% on Friday, but only up 0.5% on the week. Let's take a look at some of our best friends. First thing is I don't expect to see any kahunas the last couple of days. But I do want to, again, reiterate the presence of a bongo, of a EUREKA, which is the follow-through day, which talks about market strength, and we got daily and weekly bongos. Now let's just go to a simple moving average view. So I got my bongos on top. I've got two ways of measuring the Hindenburg, and you notice we don't have any Hindies. And then I have my favorite moving averages, which in this case is the 8-day exponential in magenta, then the 17, 50, and 200-day simple. I'm going to stop this for a second and add an OBV. Okay, I added an OBV. There's no volume on the S&P 500, so we're not going to see anything yet. Notice on the S&P 500, my bongos are green, which are good. Those are my timing indicators. I closed right above the 200-day moving average. You'll notice that my close is at 2022 and 18 cents, and my moving average is at 2019. So we closed above the 200. So, as always, I want to figure out what are we going to do next week. And so the question is, are we off to the races and a new high? Well, wouldn't that be nice? Or do we hold the 200 and do some backing and filling and ultimately new highs? That's okay with me. Or do we fail here and we'll see what the futures are? I think all those are possible. I doubt we go straight up. I'm hoping to see the blue, which is to test the 200 and move higher. But we'll see. That's why we trade, because we don't predict the future. We trade what we get. So the S&P 500, basically, it's come way off the bottoms, way, way off the bottom. In fact, if we even measure that, we've had 11.8% move in 20 periods. Again, there's over 10% move in a bear market. So it will be interesting to see, but you got to start somewhere. So if you're bullish, you can love it. And if you're bearish, then you're looking for shorting opportunities at that 200. I look at the Dow, similar story, did close above the 200, which you got to like. If I look at the NASDAQ, and you notice on the Dow, it is trading above its moving average from the OBV. It's turned up, which is nice to see as well. If I look at the NASDAQ composite, let me kill all those arrows. I like my arrows. What can I say? Trading above volume here, which is above its moving average, which is great. In between the 50 and the 200-day moving average, bongos are good. And the Russell 2000, similar story. So are we going to break out to new highs? I think we're going to have to watch and see what the market does. I don't think it's a clear yes or no. It's certainly possible. But don't be fooled. You can see a 10% rally in a bear market. A couple of the other things that we like to look at. Let's take a look at the dollar. Using UUP rather. And the dollar languishing here below the 200-day moving average. And its volume has dropped below its moving average, or OBV is heading down. If I look at volatility, pulling back to where it's been resting, so certainly, and you can see its bongos are red, which is counter to the market, so that's actually bullish as long as it stays low. When it starts to move up is when we don't want to be very long. Gold. Is this the beginning of the end? Well, our bongo went red. Right now it's a pullback in an uptrend, but we have come a long way in gold. A long way in gold. And it's possible that that we might come back to retest down here. So I wouldn't be jumping for long here. I think last week I talked about dust having good seasonality. This was a massive breakout on strong on-balance volume. But, at least we're going to have a little bit of a pullback here. Still very bullish looking, but I think there is some downside risk. And if I look at silver, sort of sideways. So, again, as I said before, do I think we're closer to a top or a bottom? I think we're close to a bottom. Do I think we might retest that bottom and that this bear market's not over? Absolutely yes. Am I all short in my own personal holdings? No. I have no signal to be short. I have signals to be long, but I have concerns that will remain until we break above and hold that 200-day moving average. Now, let's look at where some of the strength is in the market. Go down to my industry group 7, and then 2-day force. And a couple of things. I use force, which is a momentum, to rank things from best to worst. 96 groups have 2-day force up. That is extremely strong and powerful. If I look at the 5-day force, broadening it, still have 96 groups up. This is about 96 out of 170. To the downside, I've got one group to the downside, and that group is department stores, and looks like it's led to the downside by Kohl's. And let's just look at Kohl's with my typical trading chart on. And, Kohl's had a red candle high on Friday and looks like it's getting tired in its run, still below the 200-day moving average. It must have had huge volume, only 2.2 million volumes. That's it to the downside. So this is a market that does not look weak at all. 5-day to the downside, just 4 groups. Let's go back to the 2 days to the upside and look at some of the most powerful groups in the market right now. No surprise, let's look at the top 10. 1, 2, 3, energy. We got more energy down below here as well. We've got banks, both diversified and large banks. Interestingly, perhaps they figure that the Europeans are done. They've used up all their powder in their QE, and the rates can only go up from here. Who knows? But banks look stronger. Maybe it's because oil's up and they're less concerned about defaults. REITs, wouldn't expect them to be up if interest rates are going higher, but they were all over my analysis, as were telecom and communications equipment, many of which pay a nice dividend. Steel producers still up near the top. Even biotech, home builders, life insurance, mortgage finance moving their way up. Let's look at some of these top 10 groups. Exploration and production. So I don't think what I've said here has changed in 4 weeks. This is bottom fishing. You should be in some of these. Hard to know who the winner is going to be. Someone like Lou Powers can break them out by who's Permian and who's Bakken and which ones are going to win. I let the charts tell me. This one looks like it's going to win. Anadarko Petroleum, this is a biggie, $2 billion a quarter in revenue. Losing money now, still pays a dividend. Demand for the stock, anything above 2 means there's demand. It's comfortably above its 50 and 17-day moving average. Even a run back up to the 100 is about a 30% move from here. Pick your poison. I have several of these. Devon, again, breaking through the 50 today. Also a very big player, 2 to 3 billion revenue a quarter, not going anywhere, pays a 3.9% and a lot of demand. I'm actually thinking about adding to my Devon Energy position this week. Pioneer Natural Resources, an expensive one, broken above the 200. Technically, it had a kahuna. Its OBV is strong. It had a pocket pivot. Mobile breakout from a squeeze. Everything is green. This one looks great. Also a big player, over $1 billion per quarter. An expensive stock. Hess Corporation, nice move as well. Whiting, a few weeks ago, they were talking about this one going bankrupt. Now it's moving up. Horrible numbers, doesn't pay a dividend, but look at that demand. I think they did a secondary, and that made everybody happy because now they're not going to default, which probably helped the banks as well. I have a position in Marathon. Interestingly, Marathon had a big move after its secondary. ConocoPhillips. I'm not going to tell you which is the best because I can't tell you. I can tell you there's a lot of good-looking charts. I like APC and Devon. They come to the top. I'm also, as I mentioned, in a couple of others. Diversified banks. Bank of America. Boy, this thing got hammered, and all of a sudden it's back above its 50. So this guy, just look at this. From its low to its high, it's up 25% in 20 trading days. That's pretty darn impressive. A lot of momentum there, not on the basis of earnings growth, but it does make money, pays a small dividend. OBV turned positive of its moving average. That's interesting looking. Citigroup, the same. Wells Fargo, the same. JP Morgan, the same, although it didn't look as good on Friday. The first three have, well, I'll apologize for that. Hopefully my wife will answer her phone. She did. Bank of America is still red on the bongo, but Citi and Wells Fargo have turned green above. Maybe I like Citi the most. I have a position in Bank of America, but if I had to add, I'd probably be looking at Citi or Wells Fargo, but they all look good. Oil services. Halliburton, coming up to its 200-day moving average. Everything is green. Nice move up off the bottom. Weatherford, big gap up on Friday. Cheap stock. OII broke above its 50 with a kahuna. Mobile breakout, everything is green. That looks probably the best of the three I showed you so far. Schlumberger, up near, like Halliburton, up near resistance. So these are another beaten down sector trying to make a comeback. Here's FMC, ticker FTI, makes money. OBV is turned up, had a kahuna, mobile breakout from a squeeze, everything is green. I like FMC. I'm going to add this to my buy list. I already have some Schlumberger, although maybe I'll rotate out of Schlumberger, which looks like it's getting tired, and look at FMC Technologies. Fourth one is REITs. Now, REITs are kind of like oil companies, where oil companies you might want to break down, Bakken, Permian, so on and so forth. These guys, some of them are public storage, like where I keep my baseball card collection because my wife won't let it in the house. Some of them own apartments, some own retail shopping centers. They're all different. Some of them are in healthcare. So you have to be careful and not all lump them into one group. Maybe someday we'll be able to, in HGSI, stratify them by what sector of REITs they're in. Just looking, now I don't always point this out, but this grayish brown bar, that's one of the super cool things in HGSI. God, I sound like a teenager. Super cool. Because that is the group strength. And I'm able to put the industry group strength on top of my chart so I could see that the industry group is turning up, not just this specific stock. Ventas, so what is Ventas? It's in healthcare. Healthcare related REIT. It pays a 5% dividend, broke above the 200, nothing above. That looks pretty darn good, doesn't it? Equinix, this is an expensive one, lower left, upper right. Been a leader, great earnings per share growth. Pays a 2% dividend. American Tower, I think these guys have the cell towers. Great earnings per share growth. Been kind of sideways. Boston Properties, breaking above the 200, 2% dividend, great earnings per share growth. Weyerhaeusen used to be a paper company. Now it's a REIT, I guess because of its force, below the 200. Pick your poison in these. Which one did I like? Well, I continue to own one that was, well, I like Geo Group. Nope. Yes, this is one I liked. I liked it because it's put in a pretty good double bottom here. If it breaks above the 200, it had a kahuna, mobile breakout, everything is green. It pays an 8.4% dividend. That's why I liked it. The one I currently holding in my portfolio is one that was a stock of the week, which is Cone, which continues to go up since we recommended it. Also pays a 3% dividend. All right. Oil, REITs, and banks. Semiconductors. I bet we're going to see a little Broadcom here. Broadcom beat its earnings and is leading this group higher. Keep in mind, Apple started to move a little bit last week, but still has been down the dumps. Sometime in March, they have a news day, so they're going to announce some new products, which could be movers in this group. Don't like the forward-looking earnings per share growth. They did beat this week, hence a big gap up. Expensive stock, growth rate slowing down, pays a little dividend. Technically, it had a nice move. I'm a little bit concerned about the future for these guys, but you're on your own there. Intel, pullback, broke above the 200. That actually looks pretty nice. OBV is turned up. Everything is green there. Intel, nice on the pullback, pays a 3.3% dividend. Micron, languishing. Skyworks, another one that's dependent on Apple, slowing earnings per share growth. So we're seeing a lot of stuff that's been beaten up, that's been moving of late. I mentioned a lot of regional banks showed up. Some of these will be foreign banks. Here is Banco Bradesco, BBD. It is is this Brazil, I think, or South America? Doesn't tell me where it's at. Sounds like it's not U.S. Pays a teeny-weeny dividend, but broke up above 200. Certainly in a nice uptrend here, getting above the 8-day exponential, the 17 to 50 heading up. Everything is green. U.S. Bancorp, Citizens, they all look the same, don't they? Just breaking above their 50-day moving average, all underneath their 200. For the regionals, I might just buy KRE. Looks just like the stocks do. Pays a small dividend, although it doesn't say it here. And it's got a nice little 10% run before it gets up to resistance. Large pharma. Take a look at Pfizer here. You want to buy a fallen angel, a company that historically was a great company, and buy it on the cheap. Pfizer broke above its 50, had a kahuna pocket pivot, a mobile breakout from a squeeze. Bongo is still red, which is the downside. Doesn't have much in the way of earnings growth. Still pays a 3.9% dividend. Multiple of 14, and you're buying a stock pulling back to major support at the 200 weekly moving average. I actually put Pfizer on my buy list. Pfizer's not going out of business. It pays a nice dividend, and you're buying it pretty much the lowest price it's been in quite some time. AbbVie started to move on Friday. It has a little bit more earnings power, also pays a 3.9%. Kahuna, pocket pivot, mobile breakup from a squeeze, everything is green. You got to like AbbVie as well. When I think of AbbVie, I think about the best of both worlds. Has a legacy of a big pharma company with lots of revenue. You see $6 billion a quarter. Profitable, pays a nice dividend, but it also feels like a biotech with a biotech pipeline. J&J, it's already broken out. Merck, heading towards a 200. I think Pfizer looks the best. This is what I do as a top-down. I look at the top 10 group. I look at the best stocks. I build a watch list based upon this, put them into my trading radar screens, either in TradeStation or MarketWatch in Thinkorswim, and I trade them during the day tomorrow. If, of course, I'm trading, but since I'm working now, I will put in some orders before I go to work. If this happens, do this, and then I'll check it with my trusty phone in the Thinkorswim app during the day. Chevron, put a doji in on Friday, so I'll be careful about Monday. Everything is green, broke above its downtrending moving averages, number of pocket pivots and kahunas. Big company, $30 billion a month in revenue, nice dividend, expensive stock, but you're buying a past leader at a relatively good price, way off the low, but still also way off its high. Petrobras, I have a hard time with this with all the corruption in Brazil and their debt, but it's had a nice move up to resistance. Shell, BP. The other one Total actually looks interesting. Everything is green, had a mobile breakout, a kahuna, broke above its 200, pays a 4.7% dividend as well. Where's ExxonMobil? I bet ExxonMobil was down on the day. That's probably why. If you're down on the day, you don't show up, or down for the 2 days, you don't show up here. ExxonMobil has looked a lot like Chevron. It went sideways this week, pays a 3.6% dividend. You know, I think you need to be in some energy, especially if you have a longer time frame. And no surprise that 3 of the top 8 groups are energy related. In communications equipment, Apple, which had been going sideways, actually had a nice little move at the end of the week. Is now above its 8-day, still trading about 102. Everything's in a downtrend here, but it did turn green. It may rally up into this news. It doesn't have any earnings per share growth, pays a small dividend. Finisar, I think, beat earnings and had a nice Bible gap up on Friday. Bible gap up rules apply. If you don't know what I'm talking about, read Morales and Catcher. And then group number 10, telecom carriers. These are great dividend plays. I own, what I bought? I bought CenturyLink with this move. I probably should have bought AT&T. I didn't get filled on AT&T. I did get filled on CTL. AT&T continues to move up higher. This is a safety play. Now, had a red candle high here. Earnings per share growth, not awesome, but it trades at a 5% dividend and very safe. It's extended. Can't say anything else besides that. Level 3, no dividend. Verizon looks a lot like AT&T, pays a 4.3% dividend. Vodafone pays a 5.3% dividend, broke above its 50. Kahuna, mobile breakout from a squeeze, everything is green. That might be one to look at. Certainly not extended, pulled back quite a bit. And the one I'm into is CenturyLink, which has had a nice move, just looks just like AT&T. Not much way of earnings per share growth, pays a 6.8% dividend. So that's my top 10 industry groups. How are we doing on time? Let's see. All right, we're about 46 minutes in. Let's go ahead and let's do some of my bottoms-up approach. So my bottoms-up approach, I do a number of different things. I might go into all securities and look at some of my favorite scans. Sprinters. This is usually looking at stocks that have great technicals. Let's take a look at what what we're ranking them on. So white body, so it was up yesterday, makes money, lots of volume. Wilder RSI, forces, Bollingers, but it also has EPS growth, advanced decliners. So it's a sort of a balanced technical and fundamental, but it finds stocks that are really moving. So I look at these every day. Let's look at a couple of these. Dollar General broke out big on Friday. It's too far for me. Canto Medical, what a beautiful cup. A little bit of a handle, breakout. Express, a retail, LKQ. You notice there's something about these, they've all broken out, but they're all already had their run. I'm looking for things that are buyable right here. So the key here is sprinters have found me some great stocks, but maybe they're too far gone. So let's look at stocks that aren't extended yet. Let's go to my two favorites. Let's go to stocks that had a kahuna, meaning momentum, are above $2 and 150,000 shares, and within 2% of free parking, the 50-day moving average. Let's see if any of these are buyable. I see one I like, so I know this is a good choice. So by definition, these stocks have to be above the 200-day moving average. They need to be within 2% of the 50-day, which is blue, and they had to have a kahuna, and both their forces have to be green. Ball's kind of going sideways. I'm going to skip that. 5 Prime Therapeutics pull back. They had some bad news this week, so I'm going to skip them. Surgery Partners is breaking out. It's an IPO. Microsoft. So if we go to a longer term chart, Microsoft's been a powerful uptrend. Okay. We go into the daily. It pulled back to the 200. Now it's sitting on the 50. Mobile breakout from a squeeze and a kahuna, pays a 2.7% dividend. Nothing sitting above it. I like Microsoft here. I might want to look at Microsoft more. Here's the one I like, Google. Alphabet or Google, whichever you want to get. Let's look at this closely. It had a kahuna. The forces are positive. Had a mobile breakout from a squeeze. It's within 2% of its 50-day moving average. Google looks very viable if you can afford much of a $700 stock or its expensive options. Old Republic pulled back to the 50. mobile breakout from a squeeze, a pocket pivot, and a kahuna. So this is a way that I can find stocks that might be in buyable areas. SAP, don't know much about it except a technology play. Everything's green, mobile breakout squeeze, kahuna at the 50. Buying things with momentum off the 50 to me has always been a low risk phenomenon. Here's Google. As I told you, both of these look good. Anything else that I liked up here? I mentioned REITs that you do storage, like where I have my baseball cards. Here's one that pays a 2.7% dividend. Big uptrend pullback. Now you can buy it off of free parking, mobile breakout squeeze, and a kahuna. This is EXR. Another scan that I do to find good stocks are look at stocks that are in a close to PSAR reversal in a squeeze. And a bunch made my list, so let's just look at the top few. So this is the secret of these stocks. None of these have broken out yet. How do I know they haven't broken out yet? Because they are below the PSAR reversal dot. Second thing about them is they're all squeezing, so they're probably at an area of a volatility compression. The nice thing about stocks that are squeezing is that it's easy to find a place relatively close to put the stop so you don't put yourself at risk. So I'm not saying I want to buy Allergan, but if I did want to buy Allergan, this could be one of my get on a plane trades. Why? I could put my buy right above that red dot. That red dot is at 301.32, so I put my buy at 302. I put my stop probably at the low of this day here, which is the lowest day in 4, which is 284.43. Let's call it 284. So I'm doing $18 on that's about a 6% stop. And I could get on a plane, and I know that if the market opens up big down, I won't get filled. If the market trades up orderly, I'll get filled. I immediately have a stop in play at a rational place for a stop, and I'm unlikely to get killed when I'm on the air. Well, I don't want to say that. I'm unlikely to get hurt in the market because my stop's in play in case the market sells off. So these are my get on a plane trade candidates. Estee Lauder, expensive. Cardinal Health, right below the 200. If it takes out this PSAR, it's out of kahuna. Everything is grain. Mobile breakout from a squeeze. This one looks like it's getting ready to break out. It's got increasing earnings per share coming in, pays a small dividend, and I feel very fondly of them because way back here in 2010, when the stock was trading at about 30 bucks a share, they bought my last company and gave me a lot of shares. And now they're at $90 or $84. I sold off most of my holdings, but it's in a great industry with McKesson and ABC, and I think these are a good place to keep some of your money. That's Cardinal. Intuit right below. See if anything jumps out at me. Jump. Fiserv, what a steady Eddie. Lower left, upper right. Let's look at this on a weekly. Now, one of my friends, let's look at this on a monthly. Way back here, he sold his company to Fiserv, and I know he kept a lot of stock. So this is the kind of long-term equity you'd like to be in. I like buying Fiserv when it pulls back. It's going sideways here, pull back. Here's at the 17, right below the PSAR dot. Mobile breakout from a squeeze. Kahuna, I think my buddy is going to be making some more money because I think Fiserv is going higher. All right, so now I'm going to show you my secret weapon trade. Here's my other secret weapon. And then we'll finish on the chart of the week. The most powerful signal that I know is the high close doji. This is a John Person signal. It's basically a pattern around a doji in a downtrend. And what I like to look for are high closed dojis occurring weekly, and then look for stocks who have PPS buy signals on the daily and on-balance volumes are leading the high closed, leading price. So let's try to see which one I want to look at. So the first thing is you have to be in a downtrend for it to count. So let's go look at some that were, let's go look at the S&P 500 ones, which is down here. Here's Baxter. Are we in a downtrend? No, I ignore it. Boston Scientific. Yes, we are. So here's a stock that's in, here's a monthly downtrend. So in a downtrend, had a high closed doji. So I had a doji, and within 3 bars, I had a bar that closed above the doji. It's painted in orange in Trade Station. It also had a daily high closed doji. On balance volume is reaching a new high. Stock is not yet at a new high on both the daily and the weekly, which tells me the strength. I know from down here we're coming out of a squeeze on the daily and weekly. So I was able to use find Boston Scientific by looking at this scan. Let's just see if anything else comes up. I need to have a filter for stocks in a downtrend to eliminate many of these because they only count if you're in a downtrend. Now, this market's been in a big uptrend. So Google's been in a short-term downtrend. It had a high closed doji. OBV bounding up. Here's its moving average. It's coming out of a squeeze. All right, so here's one, international flavors and fragrances. High closed doji occurred here, but I don't like the OBV, so I didn't pick it. Lowe's Corporation. Downtrend, high closed doji, OBV is strong. I own Home Depot, but this one looks like it might be setting up. And here's another one that really meets. And it really came down to my 2 finalists for my stock of the day were News Corp and Boston Scientific. If you look at News Corp, clearly it's in a downtrend. In fact, it's still in a PPS sell signal. On the short term, it's already turned up. It's in a PPS buy. It's in a squeeze, and it had a mobile breakout, a pocket pivot, and a kahuna force. And the PSAR is underneath. I know that from my little dots. Okay, so I know that. So squeeze, the things I just told you here. On the daily, I look at the weekly when it turns out there is a brand new PPS buy signal on the News Corp and OBV bounding higher, leading price. So this one would make it to my short list to be bought. Let's look at News Corp in an HGSI chart. So it's certainly a fallen stock in a downtrend. It looks like it bottomed here in early February. This week it had a number of pocket pivots, a mobile breakout from a squeeze. All my timing things up here went green, and it closed right at the 200-day move, at the 50-day moving average. So I like this one a lot. My concern with, and you see the group strength here, concern I had with this was overhead supply and the fact that it's failed at that 200 a number of times. So without much further ado, let me take you to my chart of the week. So my chart of the week for March 13th is, first thing is, these are for educational purposes only. Trading, especially options, carries substantial risk of loss. I do not warrant any expectation of return, and I may or may not already have a position in the stocks I present. I do usually take the trade if it executes so I can discuss on the following session. And I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I chose a specific stock or option strategy, and where I plan on taking profits or placing stops. So here is Boston Scientific. Let's look at it with here. What do we see? We see the stock's been going sideways. It broke above a squeeze here on Friday with a big up day. Squeeze, had a mobile breakout the day before, had a kahuna, pocket pivots. Industry group has turned up, so everything here is green, coming out of a squeeze. I like this one a lot. I go into my trade station, what do I see? On the daily stock, we already know it had mobile breakout squeeze, pocket pivot, kahuna. It also has a high closed doji, and it's in a PPS buy signal. Notice the histogram is less negative as it's gone sideways. Notice OBV has broken above its moving average, and here are my HGSI indicators down here, and these are the bongo. Daily and weekly are green. On the weekly, I had a brand new high closed doji, clearly it's been in a downtrend, a new PPS buy signal, OBV rebounding high, and this is the stock that I'm going to take for my trade of the week or chart of the week. I'm going to go long if it takes out above this pivot at 18.15. My stop will be right below this last conditional change, another John Person indicator at 17.20. My one-to-one return takes my target up to 19.10. Assuming a risk per trade of $2,000, I'm risking a 95 cents per share, or about 5.25% with my current stop. I can purchase 2,100 shares. I decided I'm going to buy stock here, probably not buy options, but since we have some time, let me stop this and then open up my options program. Okay, I have opened up VectorVest Options Pro. Options Pro is a company, Tom Joseph from Dynamic Trend, www.dynamictrend. You do not have to go through VectorVest to get this. I'm not sure if I pay more or less doing it this way, but I learned about them through VectorVest, so that's why I'm using them. I'd like to put whatever the stock pick I'm thinking about into my spread selector, looking at April spreads, looking at just bullish types of trades. And what I do this for is I look at maximum profits, whether it costs me money or I get paid to take the trade, how much I can lose, and where I break even. So if I buy a stock for 100 shares, I'm going to pay $1,805. So that's my out of pocket. And if I look at what happens, if I was to buy the stock, every penny that it goes up, I make money. Every penny that it goes down, I lose money. My break even up and down is 1805. I have an infinite profit potential, but I could also lose my entire investment. But that's all I can lose is that 1805. And obviously, everybody's going to put a stop in at so many percent. Now, what if I I just bought the call. Now, if I buy just the call, what happens? When I go long a call, I make money when the stock goes up, but I lose, my loss is capped at the premium. So let's look at it in a different picture. All right, what did I do here? Hold on a sec. Okay, so here's long a call. So in a long a call, I'm going to have to pay for every share that I'm going to buy in batches of 100. I'm going to have to pay 51 to 53 cents. So for me to get 100 shares at $18, it's going to cost me 50 bucks. Or that $52 is going to give me the upside on Boston Scientific until the expiration date of my call, which is April 15th. Now, I don't make money on the first dollar since I'm paying, say, 52 cents. The stock has, and my strike is 18. The stock has to move to 18.52 for me to break even. So now my break even point does not occur until right here, which is $18.52. So the stock has to go up 52 cents before I make money. Now the cool thing is, all I can lose is that 52 cents a share that I bought the call for. And I have an infinite profit potential, but it has to move 50 cents, or in this case 47 cents, in my favor for me to break even. The downside of the option is, I may be right, this may go to 26, but if it doesn't move before April 15th, my premium goes to zero. Stock drops 30% or $5, all I can lose is 50 cents. That's the benefit of buying the call. The problem is the duration is only until April 15th. Now, you've probably seen from my prior movies, one of my favorite trades is to do a synthetic. So remember, if I bought the stock, I don't want to show that, do I? If I bought the stock, this is what it looked like. Goes up, I make money. It goes down, I get money. It's cost me $1,805 to control 100 shares, infinite profit. My maximum risk is that $1,800. What if I do a synthetic long? So in the synthetic long, I'm going to buy a call at 18 for 52 cents, and I'm going to sell a put at 18 for 45 cents. So I'm going to pay 7 cents per share on this. All the stock has to do is move 7 cents from $18 or 2 cents from the current price for me to break even. So it kind of looks exactly, in my mind, like it looks to own the stock. The difference is, to get in, I only had to pay $6.50 to control 100 shares. I have the same maximum down risk, so I have to be careful on my stops. Unlike the call, my risk is not capped, and my break even is just 2 cents above where we are. As you know from before, I'm a very big fan of the synthetic spread, and I might also, to protect myself, buy a put at, say, $16, let's say $15. So now it's costing me, on that put, it's going to cost me about 3 cents. And what I've done is I've limited my downside, so all I can lose is $300. So for 10 bucks, I can control 100 shares. I get all the upside, and my downside risk is 310. Now I could have made that a 17 call. So now I got to pay $24.50 for 100, but my maximum risk is $124.50. So I'm able to keep all the upside and limit my downside. So based upon this, I'm probably still going to go and buy the stock. It's a relatively cheap stock, and I'm looking to go long at the risk I calculated and buy the stock because I think Boston Scientific is going higher. Going back to my TradeStation scanner, I found this stock by screening for high closed dojis on a weekly time basis, and I go through the list quickly to find stocks where OBV is leading price, truly in a downtrend, and I love when I marry my HGSI indicators to TradeStation to find winners. On that note, I'll say goodbye. Hopefully the stopping and starting wasn't too disjointed. Have a great week. Trade safe. Be well. And I'll see you back in 2 or 3 weeks. As I said, I'll be on vacation next week. Thanks.